What if you think Bitcoin's as good as the S&P? If Bitcoin goes up 10% a year, even if it stays volatile at 40 vol, every one of these instruments is investment grade or investment grade equivalent, by our BTC model. You think that Bitcoin's going up 20% a year, you can see the risk just drops away. And now you've got credit spreads, 0 basis points, 5, 8, 9, 14 basis points. Anybody in the world running fixed income that wants fixed income that has a positive view toward Bitcoin, looking at this model, will see that these are all really compelling instruments. Now, what happens if you're a maximalist? If you're a maximalist, you can see the BTC risk drops the basis points, the credit spreads go to nothing. The spread premiums blow out. Is the world got a lot of maximalists? Yeah.
Michael Saylor has done it again, but this time, the stakes are sky high. As Bitcoin's rise collides with corporate finance, MicroStrategy is rewriting the rules, turning its balance sheet into a Bitcoin-powered empire. In Q2 2025, the numbers were historic: $18.3 billion raised in just 7 months, accounting for 81% of all U.S. preferred equity in 2024. One of its new credit products, STRC, became the largest IPO in America this year. While most treat Bitcoin as a risky asset, Saylor sees it as digital bedrock, volatile, yes, but foundational. That bet paid off. MicroStrategy posted $14 billion in operating income, $10 billion in net income, and a staggering $3,260 EPS, possibly the highest in the S&P 500. These gains weren't just from smart management, but from Bitcoin's surge and a shift to fair value accounting. Now the big question looms: is MicroStrategy's radical Bitcoin model the future of corporate treasury strategy, or the start of the next speculative bubble?
The analysts are all starting to cover and track Bitcoin, and they have outlooks for Bitcoin. So if you're going to cover the 160 Bitcoin companies that have Bitcoin on their balance sheet, you're going to have to form an opinion about Bitcoin. And so you can see that the average end of the year price forecast of an equity analyst covering MSTR is 168,000. And so keep that in mind, 168,000 by the end of the year. That's the consensus of the analyst community that tracks our stock right now. Technology investors are looking for the next great thing, and everybody, the consensus trade is AI. Everybody knows AI is the next thing, but now they're starting to realize that Bitcoin is also the next thing, and it's being lumped as a technology transformation and a digital disruption. This is really positive because this is going to draw lots of Magnificent Seven investors into our space. Financial regulators are embracing Bitcoin. You see a new positive Bitcoin announcement just about every other day now from all parts of the government. Just a few days ago, the SEC released a memo allowing in-kind creation and redemption of Bitcoin ETFs. This is a huge deal. This is going to accelerate the development of the industry. Now I'd like to talk about our financial products and our business. As you can see here on this slide, our company strategy sits between the crypto economy and the traditional finance economy. So the primary asset and the foundation of the crypto economy is Bitcoin, which is worth $2.3 trillion. And when I think about the crypto economy, I think about every country on earth and every capitalist on earth 24/7, 365 acting rationally in whatever their economic interest is. That's being manifested on Saturday night, and that's creating extraordinary performance and extraordinary demand to the underlying collateral, which is BTC. However, most of the world is unable to access the crypto economy, and so what we're doing is refining, and we're harnessing the power of the Bitcoin asset, and we're able to actually refine it into low volatility, low leverage, less risky financial products, and then higher volatility, higher leverage financial products.
Introducing the all-new Ledger Flex. Your next level crypto wallet is here. Sleek, premium, powerful. The Ledger Flex delivers a solid high-end feel with smooth edges for a more comfortable grip, and that satisfying nostalgic sound you didn't know you missed. Still clicking away in your old Nano S? It's time to upgrade and lock in your crypto gains with style this bull run. Smooth, modern design built for serious profit. Click the link below to grab your exclusive Ledger Flex. Ditch the rest, go Ledger Flex.
So just like you might refine a barrel of crude oil into kerosene, which would be very, very pure, and asphalt, which is not so much, we're basically providing a function that, say, an ETF cannot provide. You can see IBIT, the most famous example here in this chart. It basically wraps Bitcoin and it serves up a security flavor of raw Bitcoin to the investment community. We, on the other hand, are offering stepped down elements, convertible bonds, convertible preferred stock, senior fixed stock, junior high yield preferred stock, and of course this treasury preferred stock in the form of stretch. We're offering those, and those in essence, we're stripping and modifying the duration of the asset, and we're also stepping down the volatility of the asset, and we're actually extracting the yield from the asset, which is Bitcoin, and we're serving it to each of these fixed income investors. But the excess yield, excess volatility, excess performance that does not go in those fixed income instruments goes into the MSTR common stock. And then, of course, that feeds to the MSTR-based ETFs and the MSTR options. So all of these are different instruments. They're all targeted at a different type of investor. Some of them offer yield, some of them offer return. So let's delve into them a little bit closer. First, Strike, STRK. Strike is structured Bitcoin. So some people, they don't want high return Bitcoin. What they want is something with less downside, less risk, less volatility, more certainty. So how do I actually keep the growth but get some yield certainty, strip some of the risk? And the way to do it is with a convertible preferred stock. If we look at the spec sheet here, what you can see is that in essence, at $100, a share of Strike offers about $40 worth of equity. So it's like at that level, it's a 40 delta, 35 to 40 delta instrument. So you're getting partial upside on MSTR. You're getting a guaranteed 8% dividend, and you're getting a liquidation preference and seniority in the capital structure. So less volatility, less downside, articulated yield, that you can count on, but you can still keep some of the growth. What's the market universe for that product? Well, you have growth investors, right? The S&P 500, they've got 9% year-to-date performance, and they've got 1.3% yield. Well, Strike is 7.5% yield effectively, and it's 34% year-to-date performance. So maybe the S&P index buyer, maybe a NASDAQ 100 index buyer. Between the two of them, there's about $55 trillion in that bucket. Then you've got commercial real estate, people that want some yield, but they also want some growth over time. That's another very large bucket, $30 trillion. Then you have hedge funds that give you downside protection. They may or may not give you performance. Oftentimes they don't outperform the S&P, but they purport to be hedges, and people like the idea of some structured investment. And that's what hedge funds do. And then another target audience is just Bitcoin investors. Maybe someone that doesn't want 55 vol, 55% performance. What they want is they want some guaranteed yield, some downside protection, but they still want to keep some of the upside of Bitcoin. And then that also goes for spot ETFs of Bitcoin.
This is where Michael Saylor took things to a whole new level. He introduced a bold new metric: Bitcoin per share, reframing equity valuation through a Bitcoin lens. In 2025 alone, BPS surged by 39,716 satoshis, and since 2020, it's up over 198,000 satoshis per share. In Saylor's world, it's not about earnings, it's about how much Bitcoin your stock represents. But it's no longer just about stacking Bitcoin. Saylor has engineered a Bitcoin refinery, a financial machine that transforms BTC's volatility into structured credit products. From STRK, offering partial upside and fixed yield, to STRC, a dividend-paying instrument that acts like a Bitcoin-powered savings account. The system is over-collateralized far beyond traditional finance norms, as much as 10x. This isn't just innovation, it's a direct challenge to Wall Street. Saylor's endgame? To build a Bitcoin-based yield curve, creating a full-blown credit ecosystem that could attract trillions in global capital, well beyond ETFs and legacy instruments. If this succeeds, Bitcoin may evolve from a store of value into the foundation of the global credit market.
Okay, so we start with 199,000 Satoshis a share. And if we have no leverage, if we had no credit strategy, if we couldn't issue credit, then 10 years from now, we've got 199,000 Satoshis a share. That's like an ETF. That's a BTC factor of 1. But if we issue preferred that's equal to 10% of our Bitcoin assets, that's 10% leverage, it turns out that we have 267,000 Satoshis a share at the end of the period because we're not diluting the common stock as rapidly as we're building the Bitcoin. And if we go to 20% leverage, you see you end up with 376,000 Satoshis a share. And now let's go to 30% leverage. So you can see at 30% leverage, we would have 555,000 Satoshis per share. The green bars you see, that is the work that the treasury operation is doing. When people wonder what's the value added of a Bitcoin treasury company, it's the ability to create the green bar over the orange bar. And that's a 2.8 BTC factor. That means that, what does it mean? It means in essence, you would think that the floor for MNAV for a company that's got this sort of performance is 2.8, right? It's not the MNAV, but it's at least the floor. The MNAV of the company should be higher than 2.8. Now let's delve a little bit deeper into this idea. So I'm going to show you what happens as you increase the leverage in a Bitcoin treasury company like ours. You can see if we have 30% leverage and a Bitcoin appreciates at 30% ARR over the time period, you end up with an amplification of 2.8. You're getting 2.8 the Bitcoin performance, probably 2.8 the Bitcoin volatility, right? And you can see here, as Bitcoin grows faster, the amplification increases. If we hold the leverage constant, but Bitcoin grows at 50%, you're a 4.7 lever. And you can also see that if you hold the growth rate of Bitcoin constant but increase the leverage, like we're growing Bitcoin at 30% a year, but we go to 50% leverage, now we're 7.8 amplified, a BTC factor of nearly 8. You're getting 8 times the performance of Bitcoin. In the extreme, if you go to 50% leverage and Bitcoin goes on a tear and grows 50% a year, you're getting 22x performance on the equity versus just holding the ETF. Let's take a different slice of this. If I have Bitcoin growing at 30% a year and my credit improves or the interest rates fall, if SOFR falls to 100 basis points and we're able to reduce our dividend rate from 10 to 6, you can see the amplification goes from 2.6 to 3. And you can see that, and then if we consider the next slide, when you actually combine leverage with credit, if you actually get to 50% leverage and you get, and the interest rates fall to 5%, or if your credit spreads compress to 5%, this equity is providing 9.9 times Bitcoin. So the BTC factor goes almost to 10. So what is the universe of assets that would be interested in MSTR? Well, it's the S&P 500, it's NASDAQ, it's the Mag 7 investors, it's Bitcoin investors. And as you can see, MSTR is outperforming all of those competitors right now. And so if what you want is the Amazon of digital capital, then that's strategy. Now, the question in your mind is, can you actually go to 30% leverage or 40 or 50% leverage? So let's look at the credit model. So here we go. This is the existing capital structure, assuming the 40 vol and assuming 0% Bitcoin return.
Michael Saylor describes MicroStrategy stock as amplified Bitcoin, offering 2x to 20x Bitcoin's returns through smart, non-debt leverage, no interest payments or maturity risk, just a system built to capture Bitcoin's momentum. Despite this innovation and massive projected earnings, Wall Street remains skeptical. The company's valuation lags far behind peers, with a P/E ratio of just 4.7x compared to the S&P average near 24x, and ranks only 96th in market cap. Saylor argues MicroStrategy deserves a premium because of its unique leverage strategy, dominance in the Bitcoin options market with $100 billion open interest, and access to huge equity and credit markets. The company plans to phase out convertible debt and rely solely on heavily collateralized preferred equity, aiming to become the largest treasury company globally, surpassing giants like Berkshire Hathaway. However, this bold strategy carries enormous risk. MicroStrategy's entire financial structure depends on Bitcoin's price. If Bitcoin crashes or stalls, the company's value and credit instruments could collapse with no fallback or diversification. It's a high-stakes, one-way bet on digital gold. Now, all eyes are on Saylor's experiment, watching to see if it will redefine Wall Street or become a cautionary tale. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.